Hi, this is Mani from bsc2nse.com. In this video, I'm going to talk a few points about building long-term portfolios and why ETF should be part of your portfolio at least, if not fully. So many people would prefer to pick stocks themselves, and there are certain segment of people who would only invest in mutual funds. For them, this video is not for them. So this is for people who typically like to pick stocks on their own and invest. So as part of your portfolio, you should definitely have ETF, and beginners who want to begin the investing in the markets, investing in the index-based ETF is much better than picking specific stocks. You can still have specific stocks. You may have opinions on certain companies, so you have the urge to invest in that particular company. So it's fine to have stocks also, but definitely you can have a good amount of exposure to ETF funds as well. The reason being 80% to 90% of fund managers, be it mutual fund also, they struggle to beat the index returns, especially during dull markets. So it's only during a big wave like 2003 to 2008 that most of the fund managers, the stocks that they pick, they are actually able to beat the index. So otherwise, in the last 10 years, when the economy is relatively dull, they kind of struggle to beat index returns. This is a kind of a known fact in the market. You can just generally Google and research about it. The next one is uh, the other approach for beginners would be to initially stick to only index-based ETF, invest in them, and even in a SIP model or whenever you're able to save and invest. And then once your ETF yields profit, you can exit. Let's say your ETF goes into 30% profit and you've invested like a lakh. So you are at 30,000 profits. So you can exit the ETF by 1/4, 25% of the ETF, which would give you that 30%, 30,000, very similar to the profits. And you can reinvest that 30,000 into stocks of your choice. So that way, basically what you're doing is just taking the profits and reinvesting in stocks of your choice, which could be more risky. So therein, even if that company doesn't perform well, you don't feel so bad because it's just your profits being invested in those stocks. So this helps you psychologically, and it doesn't create panic and any kind of panic kind of sell, or after you buy a stock, the stock drops by 5% and then you tend to worry. So when you invest your hard-earned money, you tend to worry a lot. When you're reinvesting the profits into specific companies, then you feel a little bit more relaxed. So this is very psychological. I urge you to try it and you will feel the difference. So some of the popular indices that I would want to invest is NASDAQ. NASDAQ is a US index, which have stocks like Amazon, Facebook, Google, Netflix, and all the other popular companies. So you can Google the list of companies in NASDAQ and you can see the list of companies and their weightage in NASDAQ. And then Nifty 50 is the top 50 companies, and it belongs to NSE exchange. Bank Nifty mostly has HDFC, ICICI Bank, Kotak, Axis, SBI, the top components. There are few other banks as well, some of the PSU banks as well. So it's a mix of all that. And Nifty Next 50 is an index which has a set of 50 stocks, which can possibly be the future Nifty 50 kind of stocks. So most likely a stock will first enter Nifty Next 50, and then from here it may get a spot in Nifty 50 if it continues to be in the growth panel. And Nifty Midcap 150 is the last index, and this is the index you would want to invest when you expect a big wave. If I expect a big wave coming in few years from now, like the big wave that happened in 2003 to 2008. And such kind of big waves happen once every 15 years, once every 20 years, so they don't come too often. So you shouldn't rush to invest into a Nifty Midcap 150 index, but then if you do see all the sectors firing, meaning real estate, telecom, whatever all the major sectors that are there, in a big wave, all these sectors will begin to fire. If you feel the economy is in that kind of a spot, then you can definitely have exposure into Nifty Midcap 150 index as well. So the respective code names for these indices are N100. N100 you can type in Zerodha or in other brokers. I think the code should be the same. You can Google N100 ETF and you should find the details of the index and the respective stock components. So N100 is Nasdaq, Nifty Bs is Nifty 50. You can see it's pretty much just below it. Bank Nifty, it is Bank Bs. Nifty Next 50, it is set FNN. So there is a double N here. So one for Nifty, one for Next 50. And this is, I think, by SBI. So each fund is handled by different funds. This one is for Midcap 150. So in Zerodha, you can just type in MarketWatch just ETF keyword. You will find the list of all the ETFs that are available. You can choose any of the fund manager. For example, Nifty 50 ETF, you have even SBA and Kotak having their respective ETF funds for these indices. So the next point is in bearish markets. For example, right now in Corona, the markets are going down like crazy. So when you specifically pick a stock, you don't know for sure the length and breadth of the impact of Corona on a particular company. So it's very difficult to judge that, and for beginners it's definitely going to be difficult. So even for people who've been in markets for a long time, sometimes there is a point you don't know for sure which companies will thrive, which companies may take a backseat, which companies may face a huge hit. So when in doubt, and bearish markets are very uncertain markets. So when in doubt or in extremely uncertain bearish markets, it is best to invest in ETF because there's no confusion and it doesn't create uncertainty within your own decision making that where should I invest and did I make a right investment right now, am I picking the right stock. So it avoids all these. It only, you can focus on the levels to invest rather than which stock, which level, so which is an added layer of complication. So when in doubt and in uncertain bearish markets, it's better to invest in the indices. So N100, it is, as it is invested in the US markets, the fund NAV actually rises when the INR depreciates. No, so typically one thing that was seen in typical bearish markets is that the FII will pull out and funds from the Indian market. So you will see INR depreciating, which means that the USD to INR conversion will eventually rise. And it's been on a rising trend for the last 30-40 years or so. Meaning 2008, the lowest point USD INR was around 40. Now we are at 75, which means that has actually doubled. Because if you had invested back then, when you invest in ETF, the USD conversion dollar is at 40. And now if I am going to exit that ETF fund today, the conversion is at 75. So apart from the Nasdaq return, you also get a increased return because of INR depreciating from 40 to 75. I'll just show you an example here. This is the Nasdaq N100. You can see at the top left corner N100. So this I have pulled out in Zerodha. So 2018. So even if you had invested a couple of years back in N100, you would have invested around 600 rupees or around between 600 to 700 tops, 650 tops. Now, though it went down, eventually, even during Corona, if you can see here, it has dropped from peaks of 700 to lows of 500. And because of Corona, it has crashed 20-25%. Though Nasdaq is still down 20, 25, maybe 15%. That 15% has been compensated by INR depreciating by 15%. INR has depreciated from somewhere between 70, I guess 68, 70 to 76, 77. Now that has depreciated by 10%. So this fund is actually back to peak levels because of INR depreciation, and so this has not gone down by much. So investing, I think, in N100 actually makes a lot more sense. And in the last few years, if you see, actually Nasdaq has actually done better in terms of annual returns than Nifty. So this is very good kind of diversification, because US being the 50% market cap of the global market cap, US is set to do better generally, and it's a very stable market, much more stable market than our markets. And of course, with respect to Corona, US actually may see much more impact than us in terms of number of cases, number of deaths. But if you look at their economy as such, they kind of dominate the world market. So it definitely makes sense to have the N100 ETF in your portfolio. Any questions, any queries, you can just post in this video and subscribe to our channel. Stay in touch. Open a Zerodha account through us and you can avail free training from us. Thank you. Bye bye.